Hello traders, Cousin Vinny coming to you from theclosingprint.com, September 19th, 2021. In this edition of your weekend video newsletter, we'll discuss the weakness in the indices. IWM did manage to push a bit higher. We did see the Nikkei and the Bombay Stock Exchange very bullish over the past 4 and 7 weeks respectively. So there are other areas to make money. Big cap tech was mixed with Microsoft and Intel, Tesla all closing green. Sectors are seeing some bearish rotation with real estate, transports, materials, industrials, consumer staples, and utilities faring the worst. I will say small cap sectors look fairly bullish with tech and materials looking a little weak. International ETFs also seeing some bearish rotation. Japan and India showing the most strength, with Europe, Russia, South America all fading. You'll note there are far fewer stocks this week that came up on scans. IBD, relative strength at new highs, on the move stocks from the blue dot scan, and those from the volume scan showing the most promise. Bukowski has 5 of 5 green with a CPI signal bearish since September the 3rd at 16.2%. 31 bearish patterns, 6 bullish patterns, and 232 patterns waiting for breakout. Indicators, not much change here. Bullish 4, neutral 5, and bearish 11. Short term, we are neutral to bearish. Intermediate and long term, we're still bullish. S&P 500, 4,400 is key support, resistance at 4,500 and then 4,550. The call wall did scoot a little bit lower last week, so we'll deal with that on Monday, Tuesday as we trade in a negative gamma state with breadth deteriorating. The S&P 500 last week tested the 50-day moving average. RSI is below 50. We are more bearish to neutral at the present time. The support level over here in the left panel showing where we need to bounce. Otherwise, we could visit the 4250 zone where there is major support from back in May after we broke out in June. Volume was well above average, so that's telling us that there is potential for further downside. MACD's below its signal line and dropping. In addition, we did see the Nasdaq 100 fade for a second week, but it still remains in a very bullish trend, while the New York Stock Exchange composite of 2,000 stocks is showing signs of a potential plateau in the 50-day moving average. Removing candlesticks enables a better view of the markets. Whenever we start to think about potential tops, right now we look fine. We just look like we're slowing down a bit. With the last crossover and peak, with the 50-day dropping below the 200-day a year ago back in March of 2020. Therefore, it's with this in mind, with the New York Stock Exchange composite showing a potential plateau in the 50-day moving average, we want to keep an eye on breadth. The number of new highs versus new lows still above the zero line, but fading a bit, with the advanced decline showing more decliners as we dropped a little bit to end the week. Still, there was some bullish activity last week. We did see the small caps performing quite well. For 3 days, we rose Wednesday, Thursday, Friday. We're still above the 50-day moving average. And again, we're still in this range. So we need to see potentially a move back up to the highs if the small cap sectors can manage to assist again this week. With 7 of the 9 sectors bullish, only tech and materials were lower. So if you're trading small caps this week, pay particular attention to those that showed relative strength. Financials, healthcare, and consumer discretionary, the strongest of the 9 sectors. Additional things to consider are other international ETFs and exchanges that are showing relative strength, we had the Bombay Stock Exchange moving higher for the past 7 weeks after a breakout in the summertime. We had sideways price action, and then the trend continued. Note RSI on this weekly time frame is showing muscle. MACD is above its signal line and rising. So if you're trading the Bombay Stock Exchange, that's a good area to put some money over the past 7 weeks. In addition to what we saw on the Tokyo Nikkei average, the Nikkei pushing higher for the past 4 weeks off of the 50 period on the weekly time frame. We're watching how this action plays out this week as well, with the weakest action in the Hong Kong Hang Seng Stock Exchange pulling back. Most of those stocks on the exchange are down more than 50% from highs, acknowledging that most of you in the trading room are aware and are on the same page. So if you're thinking about bearish trades or shorts, this is probably the area that will get hit the hardest if the S&P 500 does slip a little lower Sunday night into Monday futures. And finally, the caveat for this week was the options expiration was quite large on Friday. This shapes up to be a volatile week with futures. If we see weakness early on, that could start a significant drawdown due to the negative gamma and lack of pre-FOMC volatility sellers. It's just as easy to see a short delta cover from dealers due to put expiration on Friday with a rip back to the 4,500 also possible. So it's very important that we wait after the opening range to get an idea what institutions plan on doing this week, as there should be a clean directional setup to start the week. Bonds are pretty much neutral at the present time. There's really no bullish setup, though I would say that this is where institutions tend to park money if they think there's going to be a pullback. So right now we're not seeing that in the 20-year weekly chart, which remains in this 9-week range-bound horizontal price action, looking for RSI to give us a signal which direction we're headed in the short term. With a side note that we do have about 40%, 44% of our retirement account in fixed assets and bonds in the Barclays Aggregate Bond Fund and in HYG. High yield corporate, both of them near 52-week highs, which is one of the 4 bullish indicators that we have this week. High yield corporate debt and junk bonds are both looking very similar. They're not breaking down. They're in the upper half of the Bollinger Bands, which is bullish. We're trading at 52-week highs with major support down below and RSIs above 50. We would look to crude oil to continue higher. This has a positive correlation to the equity markets. We want to see this moving higher. It's an area where you could put some money, Gush, USO, and crude oil, while other commodities such as copper continue this sideways range. No trend here to add to the already bullish activity that we're seeing in the builders and the home improvement and construction products manufacturers. If this turns higher, we would expect to see those stocks continue. Together with a lack of interest in a safety trade, gold continues lower in this descending channel. RSI is below 50 and dropping, showing strength of trend to the downside is pretty strong, mostly due to the US dollar strength that we've been seeing. Lately in a sideways range, we just bounced 2 weeks ago following through. This is another area where we might want to consider some hedging or some exposure, as the potential in this monthly time frame suggests we could see a move back up to the top of the range near the 103, 104 level as institutions look for an area to park money in addition to bonds. The sector heat map is telling us to be more cautious, updated every Friday across the top We can see a change from yellows and greens to more orange and yellows with strength in exploration and production, as we pointed out earlier. In addition, we have weakness in the international indices with strength in India and the Nikkei, as noted in the opening monologue, for potential areas to put money to work. Biotechs continue to show relative strength. Sector-wise, we have weakness in real estate, transports, utilities, staples, industrials, and tech stocks going into the opening bell on Monday. Ranked from top to bottom are the stocks that we see potentially following through this week. Global E Online looks like it wants to follow through and take out the highs. Volume picked up on Friday. Stochastics and MACD are both set up, signaling a potential breakout. We've got RSI above 50. Look for a test of the highs at a minimum, with most of these stocks showing the same potential. Volume picking up as well on Upstart. MACD's above its signal line. Stochastics rising. RSI showing muscle. A few of you have been trading this one last week off of this flag into the 9 EMA that got bought on Wednesday, Thursday, Friday. Snap is looking good as well, moving above the 50-day. Buford, David mentioned this to me on Thursday, looking for the follow-through and the close above the 21-day. We got that on volume. MACD's turning, stochastics rising, so the potential for this to move back up to the highs is a bit greater. As we look for follow-through, RSI suggests there's more upside. AutoNation looking very strong. We also saw strength in Ford last week, which was pretty interesting. Looking for a follow-through here. Nice descending pattern breaking out above the 50-day. You know I like to wait for the 50-day to get taken out. So if this stays pretty strong, we could see 1650 again. Another 3 points on this one, 20% or better. Volume picking up, showing institutions are active. Stochastics and MACD is rising. RSI suggesting there's more upside potential over the next week or two. So keep an eye on Ford this week. Should be pretty good. Inspire Medical Systems, sideways price actions for 2 weeks, broke out. Looking for a follow-through. Look at the weekly time frame. We've got a nice trend going. The longer the base, the higher in space. This is about 60 points on top of this level, so we could see 300 most likely over the next few months if the buyers continue to show up on Inspire Medical Systems. Look at the volume picking up. It's not a heavy volume trader, averaging about 150 to 200,000 shares. I'd like to see that pick up over the next few weeks to confirm, but we are trading an area of no overhead supply at 52-week highs as well. Penske Automotive also pushed higher last week on pretty obvious volume. Looking for continuation here. As we can see on this breakout, cup and handle, continuation pattern, above average volume, doesn't have earnings until October. Pushing through the pivot, 5% above over the past 2 trading days, looking for a continuation. Stocks from the volume scan that look good. IMAB, last week we saw some follow through here, pushing back above the 50-day. Space Mobile, AST, continues to push higher. Inexpensive name, looking for a follow through. Verisight, looking for a breakout here as well. MACD's turning, volume picking up, stochastics turning as well. RSI rising. Lucid Group pushing above the 50-day. All of these stocks from the scan showing above average volume, showing institutions are interested. MACD's above its signal line, stochastics rising. Fulgent Genetics also picking up on the above average volume scan, looking for a follow through. MACD's about to cross. Stochastics rising, RSI back to 50. Look for a push back up into the top of this range. we would suggest waiting for the opening range to see how the markets trade after Sunday futures open. Looking for a follow through on Monday. Okay, traders, this is going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. I'll send out a watch list later tonight around 12 midnight on the East Coast, 9 o'clock on the West Coast. Be sure to check your inbox. Otherwise, have a great evening, everyone, and we'll talk to you soon. Ciao.